Good evening. I'm Dan Fitzpatrick at stockmarketmentor.com, and it's Wednesday, February 22nd. I want to look at Netease again. This was a stock that in my chart of the day here a few days ago when the company reported earnings. Actually, it wasn't in my chart of the day. I covered this on the weekend update where we talked about how to buy this stock even though it was up as much as it was on this gap. And I'll just kind of summarize. If a stock gaps up like this and it doesn't come back down, there's a reason why it's not coming back down, and it's actually two different reasons. Number one, folks that own the stock aren't interested in selling yet. They still think they're going to get more out of it. Number two, folks that don't own the stock are saying, like, you know what? I got to get me some stock. I don't think this thing's coming back. And so that ultimately pushes the stock higher. Okay, so you're in the stock, and then the stock's drifting sideways. Let's say you're not in the stock. What are you going to do? Well, not much, because the stock's just been trading in this sideways range. You can see yesterday, very, very tight squeeze towards the end of the day, but that doesn't really help you. That doesn't really help you out. It just traded flat all day. But then this morning, first thing, the stock starts moving higher out of this volatility squeeze. You look how tight these Bollinger Bands are. Now, 300 is still resistance. 300 is where the stock went to last week and then paused. But if you're an active trader and you're looking at this, this is going to get your attention, and you may decide to take some shares. The stock keeps moving higher, though. Note it hits 300. That's it, and then backs off. Okay, now we're in the army. Now the stock is above 300. This tells you that this entire sideways consolidation, where so many folks are waiting for a pullback, is not happening. The stock is moving to a new high. So this is actually a buy signal for aggressive buyers. I mean, a stock that's up as much as Netease, you got to be an aggressive trader. I'm not talking about aggressive buyer, load the boat. I'm saying, you know, if you're interested in fast moving stuff and you have time to watch, just know that there's certainly a chance of reversal on a stock that does this. But once it starts moving above 300, it tells you that all the supply that knocked this down, all the supply that kept this stock down for these last several days, well, suddenly all that supply is now gone. And what we have instead is demand. And that starts pushing this stock higher. And so when you see this kind of move, just understand that it's a buying opportunity. This shows you that, again, now we just look at it on the daily chart. It shows you that the stock's ready to move higher. So pick a price target. Okay, as we look at the weekly chart, you can see zigzag, zigzag. It's really pretty overextended. But if we look at this as a real classic breakout, from bottom to top here, I'm looking at this here. From bottom to top, it's about 60 points, but let's back it off and say it's 50. So we add 50 points to this. I'm looking at the left side of my screen, by the way, in the box there. We get about 318. I'm going to round up and say 320. So my target on this trade, when I'm trying to determine what my risk reward is, I'm looking for a move to 320. Not a huge move, and I don't trade options on this. Not a huge move on this, but it's, enough. So I'm looking for about 15 bucks of upside. My stop back down a buck or two below 300, because the whole reason I'm buying this stock is because I believe that supply here left the building. Demand is pushing the stock higher. If my interpretation is correct, then the stock's going to keep going, and it's not going to move down. If, on the other hand, my interpretation is wrong. And don't think about it as being wrong. Think about it as, I have a theory, I think this is what it is, but that may in fact not be the case. So don't think about it as being wrong. Just think about the fact that, you know, your thesis, there's always another side to it, and the other side came true. If I'm wrong, then the stock is going to go back below 300. I don't have to wait for the stinking thing to go down to 270. It's an aggressive buy. I got a tight stop on it a little bit below 300. I might get stopped out. I might not. And by the way, tomorrow, if the stock starts trading above 310, maybe even 309, what do you think I'm going to do? I'm going to be adding to that position because I'm right. If, on the other hand, it falls below, I'm not going to be adding. I'm not going to be averaging down. I'm just going to be selling and, you know, take my lumps. Okay, members, over to the strategy session. And also, I held an hour-long training session today, a webinar that we're going to be doing on a pretty regular basis. So if you're not a member and you want to be looking at some intraday stuff, then check out Stock Market Mentor. Guess what? The first 30 days are on me.